I'd like to hand the conference over to Mr. Anubhav Adlakha from Antique Stock Broking. Thank you, and over to you, sir.
Good afternoon, everyone, and thank you for joining us on Deepak Nitrite's Q4 and FY21 earnings conference call. Today we have with us Mr. Maulik Mehta, Executive Director and CEO, Mr. Sanjay Upadhyay, Director of Finance and CFO, and Mr. Somsekhar Nanda, Deputy CFO. We will begin the call with opening remarks from the management team, followed by an interactive Q&A session. At the outset, I would like to clarify that certain statements made or discussed on the conference call today may be forward-looking in nature, and a disclaimer to this effect has been included in the investor communication shared with you earlier. To begin, Mr. Maulik Mehta will share his views on the operating performance, the growth plans of the company, followed by Mr. Sanjay Upadhyay, who shall take us through the financial and segmental performance. The result document has been shared with you earlier and also has been posted on the company website. I now invite Mr. Mehta to share his opening comments. Thank you, and over to you, sir.
Good afternoon, everybody, and a very warm welcome to you on Deepak Nitrite's Q4 and FY21 earnings conference call. We shared all the documents, and I hope you've had the opportunity to look at them. Unfortunately, as we speak, India is witnessing a devastating second wave of the pandemic, which is more virulent than what we saw during the first phase. Various states in the country have imposed differing kinds of lockdown while trying to balance the considerations of lives and livelihood. Deepak Nitrite is doing its bit to help society during these very testing times through a focus on healthcare and livelihood. Apart from taking the responsibility of vaccinating all of its employees and spouses, the company, in partnership with its philanthropic arm, has put up a 40-bed COVID care center with ICU and oxygen beds, purchased and deployed medium and large-size oxygen PSA plants at nearby facilities. This is in addition to expanding medical and life insurance coverage for all employees and workers. We will continue to monitor and see what best we can do to go above and beyond in what we believe is our responsible duty. In this, I will give you a brief gist of our performance during FY21 and how we are preparing ourselves for the coming year. Mr. Upadhyay will then provide you with more granular details of our financials. With last year's situation in hand, the best choice for DNL was to be more nimble-footed given the uncertainty of external conditions. The internal processes such as people management, supply chain, and processes were all closely monitored, and every effort was taken to optimize productivity. The team derived immense satisfaction that despite a loss of 1 month of production due to last year's lockdown, we were able to record growth in the second. We were able to record growth in the second half that erased the effects of the first half, which enabled us to conclude our golden jubilee year on a positive note with a growth of 3% in revenue, accompanied by about 29% growth in bottom line. By competing in both the domestic and export markets, the company was able to maximize utilization of its facilities, resulting in higher earnings. All the numbers referred to during the call are consolidated unless mentioned otherwise. Despite the severity of the second wave, the company continues to operate at elevated productivity levels in all its facilities, while complying with government regulations and safety procedures. The board has recommended a dividend of Rs 5.5 per share in FY21, equal to 275% of face value. To share the benefits of sustained growth and maintain a focus on value creation for all stakeholders. This does include a 50% special dividend to mark the company's 50th year of operations. Now, in the backdrop of a very challenging macroeconomic environment, Deepak has delivered a robust exit in FY21 on the back of a stellar performance in the fourth quarter. revenues in the fourth quarter were 1469 crores, higher by 39% year-on-year and 19% on a quarter-on-quarter basis. This was bolstered by volume as well as realization gains in the phenolics business that witnessed an incrementally favorable demand environment in the end-user industries. Revenue growth was supported by basic chemicals and fine and specialty chemical segments, which witnessed volume growth and price firming. EBITDA at 461 crores in quarter four was higher by 75% year-on-year and 36% quarter-on-quarter. EBITDA margin improved to 31% as a result of positive pricing scenario, increased plant productivity, and higher operational leverage. DNL was able to build on the current buoyant realizations for the phenolics product basket, thanks to an improvement in plant productivity by the operating team, which was supported by efficient material handling and logistics. PBT for the fourth quarter was 390 crore, higher by 94% year-on-year, primarily owing to strong results in the BC, FNS, and phenolics businesses. Apart from DPL's positive performance, profit before tax improved due to lower interest rates as a result of substantial debt reduction over the last year. Mr. Upadhyay will share more color on this in his remarks. PAT was at 290 crores in quarter four, higher by 68% year-on-year, as a result of better operational and financial efficiency, further aided by the revenue growth. The ongoing global pandemic has put our business model to test, and I am happy that we have emerged through the circumstances the stronger, more confident organization. We believe that the steps that we have put in place to improve our internal practices and ensure that the quality of profitability is high will continue to benefit us through in the future. We believe that the growth trajectory will continue across all of the SBUs, fueled by increased capacity from brownfield expansions, new products that come out of greenfield capexes, and continued strong demand from our target end segments. Coming to segmental performance, the basic chemical segment grew by 9%, supported by strong volume growth as a result of a sharp turnaround in key end-user industries, along with higher realization for specific products. This was achieved despite a significant increase in raw materials almost across the board, as the company was able to pass on a lot of the cost. Fine and specialty segment reported a 30% revenue growth, backed by volume increment of 15%. The performance was propelled by strong demand and an appealing product lineup that is tailored to a broad, diverse array of applications. The performance product segment reported lower revenues in quarter four due to the impact of naphtha pricing in the base year, which was exceptionally high, and it is very, very low at present. However, due to strong demand, there is a segment volume increase of 12%. We have to keep in mind that there has been significant impact from raw material price increases in performance products, and the nature of the business here is that most of the revenue comes from contractual agreements, which require either a price pass on or a review over a quarterly period, or somehow at some points a fixed pricing for a 3 or 6 month period. Deepak Phenolics delivered an outstanding performance with revenue growth of 77%. EBIT expanded by 319% year-on-year, translating to an EBIT margin of 28%, while 12% in Q4 last year. Plant efficiency measures culminated in utilization levels exceeding 115% of defined capacity versus 98% last year. As a result of healthy demand and the firm realizations during the quarter, revenue for both phenol and acetone significantly increased from last year's levels. With the tailwind of an economic recovery coupled with a stronger balance sheet, we are set to progress on our growth plans. During the quarter, land development in our newly acquired Dahej site for 55 acres out of a total of 127 acres is nearing completion. The site will support capacity enhancement for key products in a standalone business and will be developed in stages. Plans for forward integration products based on phenol and acetone are being finalized, and we will be sharing them at an appropriate time. On that note, as we step into the next financial year, we are confident that the current challenges in the global and specifically in the Indian economic environment notwithstanding, DNL is well equipped to evaluate the emerging growth prospects in end-user industries. Focus on people-first mindset, ensuring man and material safety is the most responsible step for us. That will form the thesis of our performance. Besides this, with a distinct shift in chemical supply chain towards a China Plus One policy, DNL has the potential to capitalize on the opportunity and accelerate in the near to medium term. I would like to add one point that throughout FY21, for almost all of our products, we as a company have either maintained or gained market share with all of our key accounts. This gives us that confidence that with its product mix and decades of manufacturing experience and a good synergy between the values that we espouse and the values that our customers espouse, Deepak is a perfect choice to lead this movement of the Indian chemical industry becoming global players. Thank you, and I would now like to hand over the call to our CFO, Mr. Sanjay Upadhyay, to address this forum and briefly take you through the financial performance of the period under review. Thank you.
Mr. Upadhyay, your line is unmuted. Please go ahead, sir.
Hello everyone, can you hear me now?
Yes, sir, we can hear you now.
Yeah. Thank you, Maulik. Good afternoon, everyone, and thank you for joining us today on Deepak Nitrite's earnings call. I'll walk you through the highlights of the financial results for the quarter ended March 31, 2000. During the quarter under review, DNL witnessed volume gains across most of its products, signaling a solid recovery. Market share of key products was either retained or increased. Revenues expanded by 39% to 1,460 crores in Q4/21, owing to volume as well as realization gains in the BC, FNS and phenolic segment. EBITDA reported at 461 crores, higher by 74%, translating to margin of 31% versus 25% in Q4/FY20. PBT grew by 94% to 390 crores, while PAT enhanced by 68% to 290 crores. Moving to a segmental performance, Basic Chemical reported a revenue of 245 crores in Q4/FY21, up by 9% from 226 crores in Q4/FY20. The company's performance was fueled by sharp increase in volumes as a result of a rebound in key end-user industries. EBIT increased by 27% to 71 crores with an EBIT margin of 29%. Finance Specialty Chemical segment revenues grew by 30% to 206 crores in Q4/FY21 as compared to 158 crores in Q4/FY20, supported by volume gain of 15%. EBIT improved by 57% to 80 crores with EBIT margin of 39%. PP segment reported revenue of 87 crores during the quarter under review. Overall volumes in PP segment improved by 12% in line with the opening up of the economy. Phenolics registered solid performance with revenues expanding by 77% to rupees 938 crores in Q4/FY21. EBIT enhanced by 319% year-on-year, translating to EBIT margin of 28.5% versus 12% in Q4/FY20. As a result of healthy demand, the revenue realization of both phenol and acetone increased significantly over last year. On the balance sheet front, company's financial status has significantly improved and it is progressively reducing debt through cash flows. Deepak Nitrite has not only attained debt-free status this fiscal in the standalone entity, but also steadily built up surplus funds of rupees 125 crores, which have been invested in liquid funds. During the quarter, DPL prepaid its project term loan of 500 crores without any prepayment penalties in Q4. Out of the total repayment of around 265 crores made during the year. In the future, interest rates will be significantly reduced as a result of this. As of March 31, the consolidated net debt equity ratio is 0.5, which is very healthy. Reflecting the strength financial position, ICRA Limited and CRISIL both upgraded the long-term rating on bank facilities of DNL from ICRA AA- to ICRA AA and CRISIL AA- to CRISIL AA. ICRA also reaffirmed short-term rating at ICRA A1+ on bank facilities as well as commercial paper program of DNL, while CRISIL Limited reaffirmed short-term rating as CRISIL A1+. For DPL, ICRA Limited has upgraded long-term rating from ICRA A to ICRA AA-. ICRA has also upgraded short-term rating from ICRA A to ICRA A1+ on bank facilities of DPL. With that, I would now request the moderator to open the forum for question and answer sessions, please.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nirav Jimodia from Anvil Research. Please go ahead.
Good afternoon, sir. Congratulations to the entire team of Deepak Nitrite for showing the outstanding numbers. Sir, I have two questions. Sir, am I audible?
Yeah, we can hear you, Nirav.
Yeah. So I have two questions, sir, on Deepak Phenolics. So if we draw down on the results, sir, we are successfully bringing down our operating cost despite of increase in the utilization levels on the phenol acetone side. And I presume that even IPA cost is also included in the numbers. So probably the standalone phenol acetone plant would have been showing more cost efficiencies, especially on the power cost. So on a YOY basis, if we see the power cost is down despite of increase in the utilization levels. So if you can share, like as Maulik Bhai always says, that our focus is more on reduction in the operating costs through process innovation and finished product prices are not in our hands. So if you can discuss some of the steps which we have taken over last 2 years in bringing down our operating cost at Deepak Phenolics. And a related question to this is, so if we see in the Western world, most of the raw material plants like propylene as well as benzene are near to the phenol acetone plants, which gives them leeway in the logistic cost. So how we are tackling this issue here, because probably benzene is available nearby, but if we see propylene, either we have to source it from some long by destinations or probably importing them. So what at Deepak Phenolics we are doing in terms of bringing down our logistic costs in order to make us more and more competitive? Thanks a lot, sir.
Maulik, should I answer this?
Yeah, sure. I can add if required.
Yeah. So, Neeraj, the point what you said is very right. And if you are attending our calls and last 3-4 years, we have always been saying this, that this crack and deals for us, it doesn't matter because we can run the plant efficiently. We know our team. We can do much more than what anybody else is doing. And if you run your plant beyond 100%, if you run your plant at 115, 120%, that too on a continuous basis, that adds a significant advantage to your operating cost. Your overhead cost is spread over a large volume, so it reduces that. Any component of cost will have a fixed and variable component both. Correct. And fixed component gets distributed over a larger and larger volumes. The key here is how do you utilize your plant to the message. These phenol and these are the products which, of course, we have been saying from the beginning, it's a bulk commodity. Correct. It is more important to run your plant more efficiently. We can't do anything in the market. Of course, market is in our favor. Of course, demand is growing. Of course, but then our operation efficiency is our operation. We have to manage that efficiently well, and then that's what we are doing. I must add one more point after Maulik took over. In fact, we are the only team. We have a president level person of operational excellence. Now, can you imagine in a chemical company like us, where we have a person of operational excellence as president? So that makes a big difference. His job is to see that constantly he monitors all the parameters, power, furnace, raw material, where we can improve, how to improve, and constantly guiding our team to perform. So, how efficiently you manage, that makes all the difference. Otherwise, बाकी तो क्या है? Phenol is a phenol. Everybody was saying कि आप phenol में क्या कर सकते हो? But we are demonstrating to the world that what we can do in phenol. And you see the performance. We are always crossing the expectation of the market. This is something very, very, we ourselves feel proud of this, that whenever we promise something, we over-deliver.
Correct.
So numbers are in front of you.
Correct. But sir, I presume power cost is predominantly a variable cost. So
not 100%,
Okay. Because
we cannot be. Of course, we take steps. Of course, we get energy audit done. Of course, we do everything. Every alternate year we have energy audit. Our internal auditors are sitting on our head. They also do this audit and then bring us to this is your steam leakage. This is where your insulator is not. Whatever we do.
Correct.
But this is a part of our process, and that's where our strength lies.
Correct. And sir, what I also presume is that since our power plant may be also in the process of getting commissioned, it will further bring down our power cost. So
of course.
Yeah, correct.
Yeah, and in the second quarter, it will.
Okay, from the second quarter. And sir, and that cost on the logistic cost, if you can explain what steps we have been taking here in terms of reducing our logistic cost, that would be.
So that from day one we have started, not now. Because this is again, you are being on the right point. These are the logistics we knew is a main area for us. Because we do not have that advantage like others what you mentioned.
Correct.
So we have to manage logistics more efficiently. Benzene, fortunately for us, Opal is there and pipeline and distance and this. But then propylene, of course, it comes from the distance. But here also, so we got the right person who actually compares it's rail is beneficial or road is beneficial or sea is beneficial. How do we transport? How do we take care of shipments? We have GPS system monitored. Everything is done in a way where you don't lose out on anything. How fast you can rotate your tankers, how fast you can move your trucks and this. So this all, we had appointed a special agency to work out. We have a person who is really expert in logistics. So again, it's same thing. Our team performs.
Correct.
Otherwise, distance, I can't do anything because that is what that really is.
Yeah, that's true. But let's say, like you mentioned on the pipeline side, in terms of, let's say, some more logistic advantages in terms of, let's say, some new propellant plants probably may be coming to near our plant, which can help us.
Of course. No doubt on that. If that happens, nothing like it. आपके मुंह में घी शक्कर यार.
Yeah, sir. Okay, and like if Maulik Bhai can add some point to this, that would be fine, sir. And my question concludes.
I think Mr. Upadhyay has already covered. I can just add that I still remember Mr. Mehta, one point to a group of investors, he said that sometimes the phenolics business seems like we're actually running a logistics company that happens to make phenol and acetone.
Correct.
So I think here, again, it is the pound, the pennies that take care of the pound.
Correct.
We do software modeling. We do a lot of analysis about how we can manage material movement without risking too much. So we are of course, in a country where there is a benzene surplus, we need our suppliers, but just as much our suppliers need us. And therefore, we are able to balance a very good short-term and long-term relationship. And right from the beginning, I think Mr. Upadhyay has mentioned this previously also, we de-risk our supply chain.
Correct.
Even though we could get better discounts, we don't just go with one or two suppliers. We actually spread our volumes, which are significant, and we are probably the largest merchant buyer of benzene in the country.
Okay. Correct.
So we have to spread it, and this has actually helped. Now, there's a new benzene plant that's coming up in Bhatinda.
Yeah.
And therefore, we continue to see small opportunities, small, medium, and big opportunities to optimize our supply chain. So this will continue to remain a good strength for us, a good muscle that we have been forced to develop. We had no choice. But at times like this, it certainly adds a feather to our cap.
Correct. And sir, even vision of Mr. Mehta would have also helped us. Like we initially started with a basic chemical phenol plant and then diversified or moving towards specialty as compared to other companies where they focus first on specialty and then probably going backward integration where probably the cost push is higher in terms of capex and everything. So I think our strategy has worked very well in terms of first setting up the basic chemical plant and then moving towards specialty.
Yeah, that is what he believes.
It's not so simple. It's not a one-trick pony. Again, in this case, this is what we did with phenol. But with another business, we may go the other way around. It always depends on one very simple question that we ask ourselves. What is the right to win that the company has? Is it by going downstream because we have a particular relationship with the customer and then working upstream? Or is it going upstream because we have a better relationship with the supplier? And what is the technology that is used? Is it something which familiarity gives us a benefit or not? Scale, does it give us a benefit or not? So nothing is a one-trick pony, but in phenol, we certainly took a decision to start with the basic and then move downwards instead of the other way around. Luckily, there's a lot of downstream applications of phenol which are all import substitutes.
Correct.
Many of them are now manufactured in India, but there's ample opportunity which is found.
Correct. Okay. Thanks a lot for answering the questions in detail, sir, and all the very best.
Yeah,
Thank you.
Thank you. The next question is from the line of Nitin Tiwari from Yes Securities. Please go ahead.
Hi, sir. Good afternoon. Thanks for giving me the opportunity, and it's a really pleasure to be talking to all of you and to know that you are keeping safe and healthy. It is also very heartening to see such good set of numbers. So I had a couple of questions. So first of all, as Mr. Mehta pointed out that there has been a strong end user demand from a number of industries and applications. So if you could elaborate on where all have we seen growth in demand in what end user industry? So that would be my first question, sir.
Nitin, your voice is not clear. You say demand in?
You mentioned that there has been a strong demand from end user segments, end user industries. So which all industries contributed to the growth in the end user demand?
So you're talking about phenol,
the overall business. So where has the demand growth coming from in case of phenol, acetone, and also from in the specialty chemicals, also for basic chemicals? So if you can just give some flavor around that.
Yeah, I can answer this for Deepak Nitrite, and I can attempt to answer it for phenolics. In Deepak Nitrite, agrochemicals they continued throughout the whole year to see strong demand. So did products which go into unique applications like personal care. And in quarter 3 and quarter 4, we saw a resurgence in the demand for dyes intermediates. So now, right now, the situation is similar, status quo, to what we saw in Q4 in terms of which industries are doing very well. Paper as a segment, I have mentioned in quarter 2, quarter 3, and now in quarter 4, volume is resurgent. prices will come in line, and we have to see the impact of Q1. But as we have mentioned earlier, we have a very good balance between domestic and export, and customers really do appreciate Deepak's products. So where we find that there is more opportunity for export demand as compared to temporary local demand, we are able to adjust very easily.
Great, sir. And in case of phenolics, what segments have contributed to growth in demand?
Nitin, phenol, when I say demand is good, it is largely in the context of phenol in India. Demand is certainly growing, no doubt about that. We have seen there is a demand growing in pharma. There are new plants which have come up. Okay, see, it's a combination of 3-4 sectors here, Nitin, when phenol performance we talk about. China is growing, and China is actually not importing phenol. So there is a short supply there. Then some plants in US is again in trouble on phenol and this. The freight cost, the advantage of a local player has always it has to be there. Our whole concept of setting a phenol plant was there was no major plant in India. It was all small 2 plants. So regional advantage has to, and now you can see in this situation where the commodity prices are going up and sea freights are also going up. It's extremely difficult for people to import and sell phenol in India. They have to incur huge cost. So Indian demand is growing. India's infrastructure is growing. India's pharma is growing. China is growing. Parallelly, there is a problem of supply. So all this is going in favor of phenol. So this is what is making big difference in phenol. And our own efforts that we are able to meet the demand. We are able to supply 125%, 130% at times to the market. Now, this is where it makes the whole difference. Then, where sometimes if you find that there is oversupply in Indian market, you are able to export also. This is something which is one never thought of early in good old days. Nobody would imagine India is exporting, but we are exporting. So it's a combination of all these sectors, Nitin.
Oh, great. So that's good to know. So acetone prices in particular have been very helpful. So how do you see that trend evolving?
It's not only acetone, Nitin. Even if you phenol prices are going up, acetone has also gone up. So it is, in fact, IPA was already doing well in first quarter, to some extent in second quarter also, but IPA has gone down in last 2 quarters. But ultimately, it's a basket of products. Somewhere some products are doing others. So, but a combination of this is working very well.
Great. So
I'll just add one point here that a lot of these products like phenol and acetone, similarly the products we have in basic chemicals. Now, in the investor community, I'll love to classify them as basic. Basic implies simple, but what we mean when we say basic chemicals is that in many cases these are full. So what's important is to make it at the right cost and to make it at the right quality. And there isn't one single end application, there are various. And many of them, the application is at a more quote-unquote basic level for our end segments. So they are part of a whole basket of other products that are used together for their application. So this allows us to de-risk instead of being over-dependent on a single application. Phenol by itself goes into, I think, about 8 or 10 applications which are significant in scope and in consumption volume. And all of them have very good international and domestic demand CAGRs. You will see a similar situation even with the products that are in the basic chemical segment. So, even if you have, for example, in say sodium nitrite or something, a situation where water treatment may not be doing well, dyes is doing well. If dyes is not doing well, food preservative is doing well. If that is not doing well, oil well chemicals are doing well. These are large things for these products, and their demand requires a particular quality of basic chemicals, and Deepak really is a global stalwart in both quality and in reliability for many of these products.
Actually, I would add to what Maulik said, and what he said is very right. If you see our model, now last year it was DASDA, and most of you know, right? The performance was because of DASDA. Now, this year, if you see bulk and finance specialty is doing exceedingly well, So, and finance specialty, this is, of course, I cannot say 45-46% margin is here to stay, but of course, we have done something really worth in that, so that the product by giving you a product contribute EBITDA margin of say around 37, 38, 40, 42%, which earlier used to be in the range of this. So this is where we are at the right place, the right products, having different applications, and this is our business model. It is a de-risk business model, something not doing well. You people call it bulk, but bulk is giving, or by according to me, is also giving a 30% EBITDA margin. So, and there is nothing called bulk, and sodium nitrite is one of the prime products for us. So, I mean, it's a combination of products and applications, how efficiently you run business, and this is what the whole thing is about.
Sir, and my second question is more for bookkeeping.
Sorry to interrupt, but may I please request you to rejoin the question queue for your follow-up, as we have people waiting for the turn?
Am I allowed the second question? That's okay. If you may allow me the second question, then I'll just ask it. This is a bookkeeping one. That what is the capex for FY20?
Please go ahead. Okay, go ahead, Deepak.
Yeah. So what was the capex for FY21, and what's the planned capex for FY22, and our basically investment plan for that? So the capacity expansion that we have planned, if you can just elaborate a little bit on that.
Maulik, you want to take this? 22.
I can share this. I can tell you what we have announced. Right? I cannot give you, the sum, but what we have announced is about 300 crores of capex in FY22. This is in Deepak Nitrite. We have not yet announced the capexes that we're looking at in the phenolics business. In FY21, the primary capexes were for brownfield expansions, and if I'm not mistaken, I think that was to the tune of about 200 crores in totality. 150 to 200 crores in Deepak Nitrite, and I think about 100 crores or so in phenolics. 150?
200 crores.
Yeah.
Sure, sir. And so the capacity expansion that you announced, if you can just elaborate on that.
Sorry?
The capacity expansions that you have already announced, I mean, if you can elaborate, where all we are adding the capacity.
The ones that were in Deepak Nitrite were commissioned during the year. They were commissioned during the year. And you have also seen that there is a volume uptick. Now, in phenolics, that will happen in the first half of FY22. The ones that we had announced last year, I think about 10 months ago. So you well know what we have announced, and that is the power plant and IPA. And we have not announced newer capital investments yet in phenolics. In nitrite, it is the 300 that we've talked about is for growth, and we will be looking at some for brownfield.
Sure. Total capex in Deepak Nitrite would be around 400 crores. 300 crores, as Maulik rightly said, about in the growth capex is in this site. Mm-hmm. And 100 crores would be in the range of in the existing brownfield expansion products. Everywhere we have an opportunity to expand. Everywhere demand is growing, so we are expanding the current capacities also of a few of our plants. Sure. So it would be in the range of 400 crores total. Now, how much we spend? See, there are again uncertainties related to dividends because people are work, labor is not available, or there are issues. There could be, because last year also we had similar research. In fact, things have actually gone further. It has worsened further. So those things are there, but we are trying our best to see that how fast we can come up with the additional new capacities. Okay.
Sure, sir. Thank you so much, sir, for all the answers, and stay safe and be healthy, sir.
Yeah.
Thank you.
I want to make one point very clear that for the investor community, it's very important to know how quickly we will go ahead with brownfield, greenfield, etc. For us, yes, profit and growth is important, but we have to be very responsible here. That a lot of this investment and growth requires manpower that will be putting the projects up in places where other people are working. You understand? And therefore, for us, what is the most important priority in today's environment is man and material safety. We will never do anything that endangers that. And you are all rest assured that growth is something which we are very keen on doing. We're well set up to do it, but we will do it very responsibly. Our first responsibility is towards the 2,000 families that are depending on us.
Yeah, Molly, you are right. Exactly.
Thank you. The next question is from the line of Rohit Nagarajan from Sunidhi Securities. Please go ahead.
Yeah, thanks for the opportunity and congratulations once again for a very good performance. So the first question is on the commentary that you did. You mentioned that you have seen market share gain across our segments as well as products. Now, was it due to import substitution because of the COVID-19 issue, or probably because of the smaller players currently not operating or operating at lower utilizations or probably going out of the system? So what was the reason, and whether we will be able to maintain this market share going forward? Thank you. That's the first question.
Yeah, short answer is yes. So yes to all of your questions, because you had 3 or 4, and all of them are in the same environment. So the short answer is yes. It's not just about whether our co-producers are able to produce or not. It's about the trust level that is there between us and our key customers. In some cases, these are implicit in the kind of relationship that we have. In some cases, they're explicit in the form of contract, short, medium, and long term. So we have focused on giving a very high deliverable in FY21. In FY22, our focus is to continue along that and focus on quality of deliverable. So we continue to ensure that our customers look at us as the first port of call in terms of getting the right quality, the right price, and consistently. We've demonstrated that in the last year. We look forward to demonstrating that again. The more you demonstrate it, the more confident they become, and other manufacturers who will tomorrow use your products become at stopping the search when they meet Deepak. So they don't go around shopping continuously. They're very happy with the relationship that they have. And we count some of the world's best companies amongst our customers. And all of these companies have had good long-term relationships with Deepak in various capacities.
Understood. That's really good to hear that we have the strong capabilities and relationships with our customers. So the second question is in terms of the phenolics business. So now our IPA is also settled. So in 3 years' time, how much of our phenol acetone IPA volume will be utilized for forward integration in terms of value-added products? Just maybe a percentage will also do. And then from a long-term perspective, how do we look at this business? So we will be completely integrating downstream, or we'll have some portion for external sales and some portion will be utilized for capital consumption. Thank you so much.
See, we have our plans to grow in terms of our own capacity. But at the same time, Chairman has already given indication that the right strategy should be to have plans to internally consume between 25 and 30% of a basic chemical. That gives us that resilience in a value chain also. But at the same time, we have successfully created a good niche for ourselves in our domestic market. And we intend to maintain that market share. So whatever it takes for us to go downstream and also internally consume and maintain the market share is what we would look forward to doing.
Sure. Thank you so much and best of luck, sir.
If you want to add any color here.
No, you right, said correct, Maulik. We have been saying this around 30 to 35% our whole this thing is to captively consume. In fact, when we were saying this, but today we are running at 130, but we will not let go any market share for sure. So for few for us, this thing would be to go more forward integrate, consume 30 to 35% ourselves, and then think of further, depending on the market situation, how do we go further in phenol and acetone. So this is the whole roadmap. We are very clear on how do we go about in next 3-4 years. All our steps are very clear. We have worked on this and we are fairly clear on that.
Understood. So thank you so much and best of luck.
Okay, thanks.
Thank you. The next question is from the line of Manoj Natalia, retail investor. Please go ahead. Your line is unmuted. Please go ahead with your question. As there's no response from the current participant, we take the next question from the line of Swarna Mukherjee from Edelweiss. Please go ahead.
Good afternoon. Thank you for the opportunity, sirs, and many congratulations for an excellent set of numbers. So I have 2-3 questions, sir. First one on the capex side again. So the investor communication gives very interesting details in terms of how you are going to utilize your existing technology platforms and also focus on new platforms like fluorination, photochlorination. So just wanted to get some more details on this in terms of what kind of opportunity size you are seeing in terms of bringing in this platform and this 300 crore growth capex that you are planning for FY22. How much do you think it would be in terms of revenue potential? And additionally, could we also expect further announcement in terms of capex during the course of the year? So, sir, that would be my first question.
I'll answer the first one. So, I think I need to mention that we look at this slightly differently from the way that you would have heard us before. And we also look at this slightly differently from the way that other companies announce their new projects. So what we have said is that we are investing in greenfield production in the new site. And these will, in addition to our existing technology platforms, add fluorination and photochlorination. So what I want to clarify is that these are platforms. You put up the processes, you put up the towers, you put up the reactors, and we have a good stable of products that we are looking forward to making. But the important point is that they fit very nicely with our existing value chains also. So as we have mentioned in the past, we have a very strict template that we follow for any new investment, which we call Deepak's right to win. And that means that there must be a good reason why Deepak should invest in this product. Not just because it is currently looking very attractive, but because in the worst of situations, I'll give you a small example. When we do our internal evaluation, we ask ourselves, at the lowest price of the last 3 years and the highest raw material price of the last 3 years, would we still be able to make enough money to have between a 3 to 4 year free cash flow position? If the answer is yes, then we know that in the best of times, we can certainly do as well as we can. But we should be able to manage it in the worst of times. We should know whether new capacities are coming up elsewhere in the world which may be better integrated than us, etc., etc. We should have a good understanding of the market. Is the market growing in double digits? So all of these things have certain weightages that they play. But if the answer to a pertinent question is no, then we very seriously do not look at that. I mean, it will really require some sort of a mammoth rationale to study some product opportunity if one of these criteria is a no. Included amongst these is also that we must be able to do what we want to do in terms of our margins and growth potential without risking environmental consents and standards. So we will not look at products which have a very low yield, where there's a lot of effluent that has to be taken care of. We are very focused on ensuring that what we invest in is something that is sustainable in the medium term and in the long term. And wherever possible, we tie up with good anchor customers. So if you ask what the top line of this is or what the bottom line of this is, it's very easy to extrapolate from what I have said. When you target a 300 crore investment, you target a 3 to 4 year free cash flow position, you would be able to estimate what kind of top line and bottom line we are looking at. And again, as I mentioned before, this is for us to integrate the new platforms with the existing core technologies that we possess. So the investment is into products which will use all of these platforms in some permutation combination to give us value-added new products.
That's very helpful.
Any announcement about new investments? Of course, we have plans. When we choose to make those announcements will matter significantly on where we are along the process of internal and board approval.
Sure.
So we don't announce until we have the loose ends also tied up.
Got it. Thanks for the detailed explanation. A couple of other quick questions, sir. First one, in terms of the realization growth that you have mentioned in basic chemicals or finance specialty chemicals. So wanted to understand, is there a factor of product mix change or would be a factor of raw material demand in a particular sector? What would be driving that, sustainability of that, and then eventually sustainability of the margins in basic chemical segment?
No, it's a very mixed answer. I can give you simple examples. The prices of most petrochemicals have gone up significantly, so has the price of crude. But so has the price of things like aniline, so has the price of chemicals like ammonia. Now, these are currently at higher prices than we have seen in years. In many cases, we are able to pass these prices on, these costs onwards, because it is not just Deepak that is experiencing these price rises. Right? It is all over the world, and we benchmark our costs against the best in the world. So today, if I have to compete with a Lanxess or a BASF in Germany or with China, I have to compete with them. So I have to see what best I can do to get my raw materials at a price that is at least reasonably competitive to any of them. Because otherwise, I cannot just say that, yes, but, BASF or China or Lanxess or somebody else is able to make it at lower but still come to me. No. I have to be able to justify not only the quality but the cost of my product as well. So in basic chemicals and in certain products, it is easier for the cycle between cost increase and price increase to be very short. In some products where there is more of a long-term relationship, where the contractual clause is to look at price reviews every quarter, there, we have to absorb the cost increase within the quarter and look at how best we can ensure that we are able to pass it on the next opportunity that we have to review. So a lot of this is dynamic, and if you ask me at a point where we have just managed to pass on a cost increase, I would show you fantastic numbers. But that does not by itself give a good justification of which is a better strategy. This is a good mix of short-term and long-term relationships that we have fostered.
But to answer your question, is EBITDA margins in bulk chemical, and it's not that just it has happened. It is a lot of efforts have gone. Market has grown. People have shown confidence, and it's here to stay. I mean, we are again, whenever we again talk of range. So you don't just take 30% of this. But yes, the whole range has gone up, say from 27 to 30% in bulk, or say finance specialty from 37, 38 to 42%. This is how the range has moved. And these are the product mix. Of course, there are 5, 6, 7 products amongst that, and then depending on the demand and supply, some products will suddenly go up, some products will go down. That's a part of that. But product basket has remained same. The volumes have gone up. It's not that product has changed, but the volumes of particular products have certainly gone up. And somewhere where we have to, supposing if we were running in the first quarter with a 50% manpower, so we had to select those products which are more beneficial, more in demand and that customer wants. So this is how we manage the whole operation. So the margin is a combination of all these, and we have actually worked on this, and this kind of margin is sustainable, we feel. Okay. Except where, see, we are comparing a year or we are actually looking at a year which was very abnormal. Say for COVID, like paper industry has not done well, textile was not doing well, even today they are not doing well. Oil industry has not done well. So those kind of products have really suffered. But others have picked up because our product finds applications like agro did very well, pharma did well. So this is where we get our strength lies.
Yes, sir. Got it, sir. Thank you so much, sir. One bookkeeping question, if I may be allowed to ask.
What is that?
So, in the presentation you have mentioned, I think the volume of the performance product segment has gone up 12%. So just wanted to understand, is that a quarter-on-quarter comparison?
This quarter-on-quarter, no? This Q4 you are saying?
Yeah. Okay, sir. Got it.
Okay.
Got it, sir. Thank you so much for taking time to answer my question. All the best, sir.
Okay, thank you.
Thank you. Before we take the next question, a reminder to the participants, please limit your question to 2 per participant. You may come back in the question queue if you have a follow-up. The next question is from the line of Ungarde from Sri Consultancy. Please go ahead. Disconnected. Harry.
Yeah, I just wanted to know what was your gross block and what kind of asset turnover you are expecting.
That you can see from balance sheet itself, Omkar.
Yeah, I was looking into what can be the asset turnover. So can tell us.
Normally we look at 1.75 to 2. 2 is to 1 or 1.75 is to 1. Normally, but it depends on, again, Maulik was explaining it has its strategy. Somewhere if you are working forward integration, backward integration, then it can be a little lower or higher also. But normal range is 1.75 to 1 or 2 is to 1.
Okay. The second question is, everybody is talking that China plus one policy, and the companies are also doing fabulously well. My question is that what can go wrong in this place where everybody is gung-ho about this chemical space, and are we as a nation or policymakers are doing enough to take market share from China, or is it just like because there is a China plus one policy China plus one sentiment everywhere, India as a country is getting some amount of market share from it?
Actually, I don't understand this question itself. When people keep on asking China plus one and policy, when you analyze a company, any company, you see the performance of last, or forget about Deepak Nitrite, you see the chemical segment for last 10 years. I am not talking about last year or year before.
My question was not regarding company, regarding the sector only.
Sector only I am saying. So for understanding the sector, you just see the chemical industry, how they have performed. Most of the companies, good companies I would say.
Yeah.
You take, for example, RP, you take Atul or any good company, and you will see a trend that last 10 years they have been growing every year. It is not that overnight something has happened and people are saying कि China plus one आज है तो कल क्या हो जाएगा. It is nothing like that. Otherwise, people will not set up. How can somebody put up a capex? How can somebody grow if this is the fear everybody keeps in mind? कि China plus one withdraw हो जाएगा, incentive, nothing. Then we would not have set up the phenol plant at all. So there is nothing called China plus one. Of course, people are looking at China plus one. वो बात सब ठीक है. But frankly, it is the chemical segment per se. It is bound to grow. There is no doubt. Because see, this is the only industry where applications are huge. And everywhere, if the world is growing, chemical has to grow because everywhere you find chemicals. So, and the fact remains that China, what it was 10 years back, it is not the same China. So, it is not China plus one, but the people, how they look at India, that is more important. China plus one could be anything, but it's not that. But Indian industries are doing well. People have, China is not on the chemical industry that way, the earlier China. So things have changed 10 years back, not yesterday or day before yesterday. It's not because of pandemic or anything. Okay, so this is here to stay. There is nothing as such कि ये कल उठ के क्या हो जाएगा. It's not possible. It cannot really go back on this.
Okay, from my side, I have a similar view, but it's slightly controversial. I believe that, in the last 1 year, 1.5 years, our government has done a lot to say Atmanirbhar Bharat, Atmanirbhar Bharat. Let's forget the happenings of the last 1 month, 1.5 months. But in general, the government has looked at different levers to make manufacturing in India more attractive option. Right now, I believe that Atmanirbhar Bharat is a very good interim step. But looking at it as a final step, I think is a mistake. What we should look at is Atmanirbhar Bharat until the intermission, and then after the intermission for the rest of the movie, Global India. We must be making in India for the world. If we make in India for India, then we restrict ourselves to national scale. And as we are seeing in phenol and acetone, the difference that we are seeing today between Deepak Phenolics and its next largest domestic competition, look at the difference in the operational costs. Look at the difference in the margins. This is the difference between national scale and international scale. Now, that does not mean that on every single item and every single product, everything has to be largest in the world. But we must think in terms of what is the operational efficiency that we can drive by putting up something which is really a global scale. Because then, however the market changes, and see that India as a consumer is growing very fast, one of the fastest growing countries in the world in terms of consumption. So the Indian population with its size and its aspiration is also demanding and consuming more chemicals. So is the rest of the world. So global India should be the ideal destination, not Atmanirbhar Bharat. In the meanwhile, what I can also share is that China plus one is not just about China, but it is also about India. It is also about other countries like India. The reason that Deepak is attractive to its customers is because, one, we have a large variety of competencies in technology, and we manage them efficiently and sustainably in an environmentally sustainable manner. Second, we are able to demonstrate on a daily basis that we have the same values as they do, right? We are part of the Nicer Global Alliance. We are part of the Together for Sustainability initiative. We are accredited with responsible care. Now, these things may not mean much to a lot of Indian companies because they're not used to it. But these become significant motivating factors for European and American companies to look at Deepak, not only because we are the cheapest, but because when they are audited by their activist investors and their shareholders, when they say that Deepak, which shares similar values as they do, is their key supplier for important intermediates, that means that somebody who's supplying to them cares as much about the environment, will ensure that the material reaches them safely, securely, and is managing all of its operations without cutting corners, ensuring that all of its workers, all of its employees are paid well, there's a good diversity, there's a good mix of solid financials and investment into R&D and growth. These are important for them, it's important for their investors, and it is important for us. So as you see, China plus one is not just about a country, and it's not just about ex-China. I can also very happily tell you that in the last 6 months, we have done fantastic business selling to China also. So Deepak's products are sold into China at very good margins. Very good margins.
Okay. All right. Thanks for the detailed explanation. Much appreciated. Thank you.
Thank you.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Yeah, I was looking at profits reported for Phenolics in this quarter. It is 267 crores. And when I look at the 4 quarters of the last year, not the current year, those numbers are 59, 24, 41, and 64, adding all up to 187 crore for the year of 1920. So that means a single quarter has made almost 40% more profit than the entire last year. Similarly, when I see the performance product profits in the current quarter, it is a tiny sum of 3 crores, and last year it is 419 crores. And for the current year, it is hardly 5% of the entire last year's earnings for the performance products. So is this some kind of a wild swinging lottery, or there is some greater predictability about how the businesses would behave over a period of time? I mean, there can be some acute swings at a particular point of time, I can understand. But given the really large kind of swings in two businesses in opposing direction.
Can I request you, Mr. Bharat, because this question is too general a question, number one, and these questions we are answering for last 2 years, this performance, and so it will need a little some taking you to the earlier years also to see it. So what you can do is to talk to Mr. Somsekhar Minda separately on performance, and of course, phenol, if anybody is understanding it and following phenol business, then he will know. But Mr. Nanda can guide you and help you in answering this in little detail. Because for that, you will have to understand the business of both the segments. Okay, so because this call will be too short a time to explain to you all these things.
Perfect. I mean, I don't have good understanding, and that is the reason why I'm asking.
Yeah, so better is you can just have a separate call on this with Mr. Nanda and understand the business and segments, then you will be able to appreciate these.
Yeah, we'll work with whoever person and we'll reach you.
Yeah, please.
Yeah. See, in the long term, I'll just mention one thing which we have said before. The right EBITDA for the performance products business should be in the range of about 18 to 20%. Sorry, this is the right EBITDA. Now, there will be times where it's longer, and there will be times where it is shorter.
No, Maulik, I think let Som explain to him.
Yeah, absolutely.
I will reach out to Bharat Bhai and I will take him through this.
Yeah, okay.
No problem at all, because to me it sounds not very clear. So I'll be too delighted.
Yeah. So better if you can, he will take you through the...
I'll prefer to spend good time and understand.
Yeah, okay.
Thank you.
Right.
Thank you. The next question is from the line of Ashil from Tejas. Please go ahead.
Hi, sir. Congrats on a good set of numbers this quarter.
Yeah, thank you.
Understand.
Sorry, can't hear you clearly, please.
Sorry, 1 second. Hello, is it better?
Yes.
Little better.
Sorry, congrats on a good set of numbers. Just wanted to understand how you mentioned the right margins for the performance products segment. The phenolic segment, will you have any sort of estimate in a similar way?
The phenolic segment, you can't say this margin or that margin. Phenolics is again a different. I mean, if you see the business, if you understand the business, it's not possible to say this is the right margin. Normally, we would say yes in a good old days, but that our margin would be in the range of, say, depending on the crack, benzene, and this kind. But last 2 years, the volatility, 3 years, it's very high, and because of this situation. But one thing is very clear that Phenolics is how efficiently you run the business improves your margin. That's very important here. Okay, because the market is of course one part, but then running the business efficiently is another part of it, and the volume game, because the demand of phenol is growing. There is no doubt on that. Whatever is the margin. So demand is growing. If you supply higher volumes, you are bound to make more profit in Phenolics. So to give a particular range like Deepak Nitrite is difficult in phenol. But I can certainly say that our margin is any day better than whatever crack market is calculating. And it will be much higher than 10-15% than normal crack. If you understand the phenol business, if you somebody is following the phenol business.
Understood, sir. And the last question I had was, how do you look at how much of the acetone you would like to utilize for IPA versus selling it as acetone itself?
It is doing how better. IPA was doing exceedingly well in first 2 quarters last year. Then it went down. So it depends. If IPA starts doing well, then we will start acetone goes more mainly for IPA. Otherwise, acetone per se is also having good demand. Acetone per se is also having good margin. So there is no big calculation in that.
Okay, so it's not that you're always running IPA at full capacity. You take a call based on that.
It need not be.
Okay.
It depends.
Yes, again, it depends on cost economics. I think IPA and acetone are some of the easier examples. Yeah, you may not think of this, but for us, the more challenging ones are how do you decide which product to give something like nitric acid or hydrogen to if there is a short supply. So we are regularly doing things like linear programming to analyze where we are, what we need to do. So many things like this where the efficiency that we are able to eke out, it's very similar to how someone like a day trader would look at it in terms of where we should be, when we should be buying, at what price, and how we should be ensuring that we're able to utilize. Simple example is in the last 3-4 months, is there an opportunity for us to buy from petrochemicals, from suppliers, dealers at a lower price than the index simply because they are in a hurry to refill their tanks at the port? So we analyze tank refilling costs. The margins come from being sufficiently successful at managing so many different variables. IPA and acetone, of course, we look at not just the margin of acetone and IPA, but also what it is that would drive the efficiency. This is a continuous process. Do we use it at 50%? Do we use it at 100%? What is better? Not just on the basis of acetone cost and price, but also on the basis of operational cost.
Understood. Thank you, sir.
Thank you. Before we take the next question, a reminder to the participants, please limit your question to one per participant only. The next question is from the line of Saurabh from Asian Market Securities. Please go ahead.
Yeah, thank you for taking my question. So, what was the utilization level? I believe you mentioned 115 plus, so was it 120%?
It was more than 150 on a continuous basis. At times it is more than 120 also.
Oh, okay. And sir, in terms of the new technology or the new chemistry, what you have mentioned, so are we developing our own product, or we are working with a customer to make some product based on the newer technology?
Both.
So you're talking of a new investment? What is it? What context you are saying?
No, you mentioned about the 2 new chemistry platforms that
I understand. Yeah, Maulik.
Yeah, so both. I mean, see, we are adding these platforms in addition to the existing platform. Some of the products that we are getting into are ones where we are working with the customer. But that customer is also an anchor customer. It is not the only customer. And at the same time, we've seen that there is enough demand in the market and enough growth opportunity to go downstream. So we are also looking at supplying to the market. And in some products, we are looking also at partially it is just going to be sold like that, and partially it will be internally consumed, partially it will also be looked at for new growth opportunities. So just to caution that the two platforms that we added does not mean that we're adding two products. We're adding more products. These are the two platforms we are adding to the existing platforms that we are investing into in the new facility.
Okay. So are we also looking at contract manufacturing opportunity as well on a longer term basis, long term contracts?
Yeah, we have signaled that we are open to that. We've got some good interest. I can share that there is that also being it's at a very advanced level. It's not just in terms of discussion, but we are fine-tuning the long-term arrangement.
Okay, thank you.
For us, like I mentioned earlier, we are not a contract manufacturing company. Okay, so this does not signal the bulk of our business. It also does not signal a change in strategy for the company. We have just said that we are open to opportunities, and we are taking an opportunity, but that just means that we are widening the diversity of our business relationship. This is not a right turn or a left turn.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Tejas Shah from Nippon India AMC. Please go ahead.
Yeah, hi. Good afternoon, Maulik. Good afternoon, Upadhyay ji.
Good afternoon.
The 300 crore capex, is this part of the clean tech or is it something beyond that? Because I think in last call, Maulik had alluded that the board approval will be required for the next phase of this new subsidiary which you have formed. So is this part of the same capex plan or is there something other than that?
No, this is same capex plan.
Okay. And just on the Deepak Phenolics side, when can we see the next line of downstream products coming? I know we are adding IPA capacity. Any new product lined up this year or early next year?
The products are already lined up, not that, but we are yet to, as Maulik said in the opening remark itself, that yes, we are working on it. Things are, much at advanced stage. But then, to give you a right this thing, we'll have to wait for some time, the answer. Maybe in a quarter or two maximum.
Actually, the technology providers have had to deal with COVID.
Okay.
Their side. So the information exchange is lower than it should have been. We would have liked to be, one or two steps ahead, like we have been in Deepak Nitrite. But this is unforeseen, unfortunate. As Mr. Upadhyay mentioned, that we're looking forward to being able to share good news, but we'll do it appropriately.
Okay. And this chlorination and photochlorination will also have similar application industries, that is mainly agrochemicals and pharma.
No, like I said, that the applications are diverse.
Okay.
But yes, these two will be, there is a bias towards these. If I look at the current set of products that we are adding to our roster, right? And but again, I must caution, do not think that the same product requires both chlorination and photochlorination and nothing else. No.
Yeah. These are the additional steps you will be doing. Hello?
Yeah.
Okay, yeah. Thank you very much.
Thank you.
Thank you. The next question is from the line of Tarang from Old Bridge Capital. Please go ahead.
Hi, Maulik and Mr. Upadhyay. Good morning. Good afternoon. Just a couple of questions from my side. One, given the nature of your business, whether it's the standalone entity or the Phenolics business, do you have, what proportion of these businesses would be contracted such that you'll have a offtake visibility? And second, if you could give us some sense on your Phenolics utilization for FY20 and for FY21.
Utilization, we just say, no, it's 115%.
For the entire year, is it?
Yeah.
Yeah.
And what was it for FY20?
20 was around 85, 90, I think 90%.
Sorry, come again, please.
Around 90%.
Okay. And to my first question.
What was the first question? Can you come back again?
So, what proportion of your business, right, do you have volumes visibility in terms of having some kind of offtake arrangement with your customers, whether it's the standalone business or the phenolics business?
See, again, let's talk of Deepak Nitrite first. Offtake, if you ask me, a signed agreement, of course, we will have only for few products. But more or less, our customers are there for years, like any product you take, nitrotoluenes or sodium nitrite. And so we know what is their offtake. We know how much. I mean, we are the only supplier to them. So agreement nahi hai, but by and large we know our business, how much it will be next year, what kind of volume they will take. Unless a situation like COVID and this happens, we are fairly clear about our offtakes next year in almost all the products.
Okay. I can also add that even with COVID, we have nurtured good relationships with export customers. So we're very comfortable moving from a domestic customer set to an export customer set, or from one end application to another. For our finance specialties business, most of the business has, because we manufacture a particular product for a very small group of customers, one customer or a very small group. So there we have good medium-term visibility, and frankly, we can say that, okay, by and large, we have good clarity about whether there is COVID or there isn't COVID. As long as we're able to manufacture and move material, there is good visibility through the year.
Okay.
Or at least for the next 6 to 9 months at any given time.
Okay, and that applies for phenolics as well.
Phenolics also, there is a good diversity of customers. And in any case, like what happened in the first quarter, in the beginning of the second quarter, when there is think about it in this fashion, that as a company, we are constrained even by the size of our raw material storage or our finished goods storage in phenol. And every day we manufacture more than 600-700 tons of phenol and then about 300-400 tons of acetone. Now, in this kind of volume that we are talking about, we don't have more than a few days of storage for FG or RM. If we're able to continuously manufacture at utilization exceeding 100%, you can imagine that we did find ways and means of selling both phenol and acetone and arranging raw materials for phenol and acetone, even in the peak of the pandemic last year, even in the peak of the lockdown last year. So we do understand that there are domestic risks, there are export risks, but we have identified enough de-risking opportunities so that as long as we're able to manufacture, we will see what best we can do to get the raw materials and send the FG. We've demonstrated it before. We're confident about doing so again.
Okay. Thank you. All the best, guys.
Thank you.
Thank you. The next question is from the line of Sabyasachi. Well, we've lost the line for the current participant. We take the next question from the line of Naresh Vaswani from Samiksha Capital. Please go ahead.
Yeah, thanks and congrats on a great set of numbers. My question is there any delay on the capex front due to the enhancing capital cost that you are witnessing? And secondly, considering all the plans and greenfield and brownfield that you have, what sort of EBITDA growth can we expect on FY21 base for the next 3 years?
There are no delays because of capex or whatever you say. cost or nothing of that sort. Okay. That was your first question, right?
Yes.
તમે જે વ્યક્તિ સાથે વાત કરી રહ્યા છો એમને તમારા કોલને હોલ્ડ પર રાખ્યો છે. કૃપા કરી.
Hello.
Yes.
Hello. So there is no delay on account of that. EBITDA margin, if you see again year on year, we are improving our margins. Margins have gone up significantly. In fact, all the segments. So when you ask EBITDA, you have to see across all the segments, finance, specialty, performance, and so everywhere things have improved, and it will continue to improve. Every year we improve by 1 or 2%, 3%, 4%. In fact, last year, first 2 years, so it has gone up by 6, 7, 8%. So we are today at around 28, 29%. So it continues to grow.
Sure. Sir, I was asking on the absolute number, that growth I wanted to know. What can we expect for next 3 years?
Absolute number means the absolute EBITDA number?
Yes.
The number, I mean, that it cannot be given like this. What is EBITDA number?
Just what, based on your plans, what sort of some guidance, if you can give?
No. This kind of guidance in particular.
Yeah, exactly. I think we have shared with you our philosophy for investing. I think you should take the guidance from that.
Right.
If you study our numbers and if you study our products, you automatically come to know how it will go.
Sure. Okay. Thanks. All the best.
Thank you.
Thank you. The next question is from the line of Dhruvan from HDFC Fund. Please go ahead.
Yeah, thank you so much, sir. So just one clarification. In the earlier question, you mentioned that the Phenolics was operating at 115% for the full year of FY21. Or was it from 3Q that you increased it? Just for my numbers, I just wanted to clarify.
What is that?
So the 115% utilization for Phenolics, is it for full year of FY21 or was it starting 3Q?
The average.
First quarter was of course down because of the 1 month it was closure, so lockdown.
Okay, so from 2Q it was operating at 115 consistently.
Yeah, because Q1 was first month, but on an average I say.
Got it. And just two quick numbers is you shared the volume growth for the quarter for the two segments, basic and the fine and specialty. Can you also share the same numbers for the full year?
See, when you see volume growth, you have to compare the last 1 month.
Yeah. I will adjust that in my internal working.
If you can, if I adjust that, then we have grown by say 8 to 9%.
In the basic chemical.
Overall, I'm saying. The finance specialty growth was higher, of course.
Well, I think I can say that in Q4 at least, barring perhaps 1 or 2 products, by and large we have operated most of our plants at close enough to capacity. In some cases we have exceeded capacity. So depending on how fast we are able to unlock capacity, that is how fast we will be able to grow volumes. And we are awaiting some of the segments that were down in FY21, and we've seen volume resurgence. We've also seen price resurgence, but unfortunately, as I mentioned, we've been impacted by raw material costs. So we are working to see how all that stabilizes, but then we should be able to see increased volumes for pretty much all of our products, barring perhaps fuel additives, which we are expecting to continue to see a tepid demand for at least the next quarter or 2 quarters. But even this, we have seen very briefly in the middle that it was just about to turn around, and the situation that was on the ground got bad again. So fingers crossed, we have to see, but this is the guidance we can give for fuel additives. The rest of it, we are seeing that we need to add capacity as quickly as possible.
Yeah, sure. I was looking at the historical FY21, if that is available readily, or probably I'll take it later. For the full year, like for example, you gave the quarter volume growth for specialty at 15%, and I believe basic, I missed the number for basic, but if that is available for the full year.
Sorry?
That number we can get, you can.
Yeah, I'll take it later.
I told you, it's around 8 to 9% overall. You have to adjust for 1 month's loss of production and then compare. Okay.
Perfect, sir. Thanks so much.
Yeah.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments.
Thank you all for joining us on this Deepak Nitrite conference call. Hope you answered your questions satisfactorily. In case you have further questions, further clarifications required, you can get in touch with Mr. Somsekhar Nanda, our Deputy CFO. We'll give you more details about the same. Thank you so much.
Yeah, thank you from my side also. I know that the last 1 month has been a very scary month for all of us. And I'm happy to know that all of us share the same level of concern about the company, the economy, our well-wishers, our family. I think that with the same kind of perseverance and determination that we are very well known for, famous for around the world, I'm sure that this too shall pass. I genuinely do believe that it is darkest before dawn. And all of us together, we should be able to see the light of dawn very soon. Thank you, everybody. Please stay safe.
Thank you.
Thank
On
you.
behalf of Deepak Nitrite Limited, this concludes this conference. Thank you all for joining. You may now disconnect your line.